Hey, good evening and blessings out there. Facebook, it's your man Rod Hickman, Generational Wealth Builders, where poverty ends with us. Listen, glad to be coming to you tonight. Uh, really want to kind of share something with you on tonight. A couple of things that I really just kind of wanted to highlight because I know a lot of people uh, don't know this, right? And one thing about me is I always want to make sure that people are in the know. Um, like G.I. Joe used to say, knowing is half the battle. So, I wanted to talk a little bit tonight about a topic called BOLI. And as you can see from the topic on tonight, it says BOLI does what? Well, what in the world is BOLI? BOLI actually is an acronym that stands for Bank Owned Life Insurance. And so I'm going to just talk for a few minutes tonight about bank owned life insurance, what it does, and why you need to know about bank owned life insurance. So, again, one thing I want you to understand about when I do these posts, my videos are always designed to inform, to educate, to help you be able to make better decisions about your overall building building your generational wealth, right? And so I see myself kind of as like a, hey man, you might want to take a look at this, right? I don't have time to just sit here and tell you meaningless facts. But one of the things that I notice most often when I work and sit down with the family, sit down with the client, is that when I share with them the concepts of the wealthy, a lot of them, their response is, are you for real? You kidding me, bro? They've been doing that for that long? That's how easy it is. That's how easy it is. And so I always like getting this information out to the masses because I want you to be able to help your family take advantage of some of the things that could help you build generational wealth. Does that make sense? So that's what we're going to do tonight. I'm going to talk a little bit about bank owned life insurance. So I'm going to put some of the stuff in the chat because I want you to see the definitions. So, bank owned life insurance is simply nothing more than an insurance policy wherewith the banks take money or whatever financial institution, and even there are some corporations that do this. And what they're going to do, they use that as an investment. And when they use that as an investment, they basically take your money and they put it right on over there into these life insurance policies. Now, we're going to talk a little bit about the index universal life. So that is the vehicle that they use, or the IUL. And you've probably heard of that. I know if you've heard me talk a time or two, you've heard me talk about the IUL policy. You know, again, that is one of the greatest policies that's around. Why? Because it allows you to have massive benefits. And we'll talk about that here in a little bit. But let's talk about what a bank does. So I'm going to ask you this question. Whose money do you think a bank is actually going to use? I want you to keep that thought in your mind. Again, please feel free to like, share, chat back and forth. I love to hear from people when they put in here. But here we go. A bank owned life insurance policy is a type of insurance policy that is maintained by the bank and is owned by the bank. And what happens is used as an investment and risk management tool. So they are putting their money, they don't want to lose money. They're putting their money into a life insurance policy. And so I have to pause right here and ask you a question. If banks who are in the business of making money are putting their money into a life insurance policy, why aren't you? I'm gonna ask that question again. If banks who are known for making money are putting your money, my money, into a life insurance policy, the question has to be asked, why are you not doing it? But we'll talk more about it. All right. So here's the first uh, point that I'll make on tonight, that the purpose of the bank owned life insurance policy is to provide the bank with a tax efficient way to offset employee benefit costs, such as, watch this, retirement plan. Now, how long have I been on here crowing about retirement plans? How long have I been on here crowing about making sure that your retirement is going to be taken care of, right? How many times? Countless times. But notice what they do. They take your money, they take my money, they put it into a life insurance policy in order to make sure that they can offset the cost of employee benefits, such as retirement plans. So they use the money that's gained, they use the capital that's gained from the bank owned life insurance policy to turn around and fund retirement. Are y'all seeing where we're going with this? So let me ask it another way. If I can just ask it straight, right? How you gonna use my money to pay for somebody else's retirement, but I have to take my money and put it into a 401k that may or may not be there when I retire? Y'all starting to get where I'm going. You're picking up what I'm putting down. So that's the first thing about these bank-owned life insurance policies. That's why they do. And notice what they say. They are typically purchased on the lives of key employees, such as executives and other highly compensated people. Now, here we go again. If they, that's typically who they put them on, but they can put them on anyone. And guess what that means? God forbid, if during the time that you're working there, they got a life insurance policy on you to make sure your funding is there. If you pass, do you think they're gonna turn around and give you that your family that money? Nope, nope, nope. Let's move on down the road. The next point is that when it comes to cash value accumulation, right? With the cash value accumulation, these BOLI policies accumulate cash over time. And they actually have the option to get that cash tax deferred, meaning they don't have to pay any taxes for growing money, but if they need it, they get access to it. They can access that money. Now, let me ask you a question, and y'all should know where I'm going with this. When it comes to your 401k, if you have to borrow money from your 401k, do you have to pay that money back? Yeah, absolutely. Is that money tax free? Absolutely not. So you mean to tell me, here we go again, there's a vehicle that'll allow me to get access to my money tax free and I'm not using it? But yet and still, I'm using all of the money in my retirement plan that I have to get taxed and penalized on, and I don't get that money back. Are y'all kind of seeing where we're going? So again, I know a lot of the stuff that I share, sometimes people hear it, they don't hear it. Again, you'll never be able to say that Rod didn't tell me. You'll never be able to like, man, why didn't you tell me that? How come you didn't tell me I was getting beat down to my darn socks messing around with this bank? Okay, these are those things that make you say, right? All right, let's go down to the next point, and I'm gonna be getting ready to get on out of your way. Now, the death benefit in the event, and I just talked about this, that person dies, they get the money. So let me paint the picture, and I started talking about it a little earlier. So Randy's working for the bank. They have a bank-owned life insurance policy on good old Randy. Now here we go. If good old Randy passes, then they get that death benefit. So that's free money. That's free money that goes back to the bank. Family doesn't get it. That goes back to the bank. So that enlarges the bank's coffers. So think of it, if you will. You can only get like 2, maybe 3 times your annual salary for your life insurance at the job. But here it is, the bank has a high value life insurance policy on you that's building cash value, that they can use that money and get access to that cash value. You can't get access to it. It's the bank. The bank actually owns it. And so if the bank needs that money, if they need that cash, they can pull from that cash value, and you don't even know a thing about it. And then, God forbid, if you die, the only thing that the company has to pay out is the policy that's through the employer, not this one. Man, ain't that about nothing? Ain't that about nothing? Man, good God Almighty. Okay, let's move on down the road. So the investment component with this is, as I was just talking about, this will allow them to be able to take that cash value and use it to invest and do whatever they want to do, whether they want to add on something, whether they want to pay for something, whatever the case may be. They have access to that money. And as I told you a little earlier, it's tax free, or they can take that money and put it into other vehicles. Now, let me give you an example. let's just say you have some money here, right? And you say, hey, I need to make sure that my retirement money is good. I want to put my money into an annuity. Well, guess what? You could pull money from that bank owned life insurance policy, throw it into an annuity, and that annuity is just going to grow. So that by the time you get ready to retire, you end up with income for life. But yet and still, the bank is taking your money, taking my money, and they're making other investments with it. That's why they got lollipops. How you think they pay for them lollipops? How you think they pay for that cold air and everything else in there? How you think they pay for them calendars and them nice fancy pens? This is how they're doing it. Bank-owned life insurance. And remember, they're using your money, they're using my money to do it. And so last but not least, the last point that I'll bring up are the tax benefits. And as I told you beforehand, when you get access to tax-free money, um, it's a game changer. And right now, there are very few vehicles that allow you to have access to your money tax-free. The main one that's out there is if you keep it under the mattress. The other one, where it's going to grow and you can have access to it, is through a life insurance policy. And so, with that being said, this is what the banks are doing. They're basically taking your money, my money, and they're putting that money into a life insurance policy. And what happens is, as I told you beforehand, when they need access to money, they can pull that. Imagine that if they have 100 senior employees, if they have 1,000 senior employees, however many employees they have, these life insurance policies on, they now have access to money that they can get tax free to do whatever it is they want to do with. And so I said all of that to say this. Do you have a life insurance policy that builds cash value? Do you have an insurance policy like what the bank has in order to make sure that your family is taken care of? In order to make sure that you have access to money if you need it, tax free. In order to make sure that, again, God forbid, if you should pass, your family is properly taken care of. Do you have that? Do you have a life insurance policy that pays you out 6% annual rate of return each year, greater than 6%? Do you? If the answer is no, the question is why? The banks are doing it. Why wouldn't you do it? Right? If it's good enough for the banks, again, who are the people who know how to make money? Banks know how to make money. If they're doing it, why aren't you doing it? Aren't you good enough? And again, remember, they're taking your money, my money, and they are making money. So why are you not making money? I hear you. Well, man, I don't know how to do all that. You don't have to. All you have to do is sit down and have a consultation, and we can get you going on your own index universal life policy where you're building cash value and you have access to that cash value. You can do it what you want to do it, as well as you can overfund it, which is what the banks do. Because when they overfund it, guess what happened? The interest grows at a greater rate. And then another thing about life insurance. So let's just say you overfunded it. I'm just going to pull a number here, $10,000. And you pull that $10,000 out. Guess what? They're still going to credit you as if that $10,000 is there. So your interest is going to grow as if the money that you took out, the money that you borrowed against, is still there. You can't beat that with a stick. And that's what we show our clients here at Generational Wealth Builders. We show you how to be in the driver's seat. We show you how you can literally become your own bank. Wouldn't that be grand? Now, I'm going to say this last thing and I'm done. A lot of times when I start talking about a permanent policy, people think that I'm talking about a whole life insurance policy. But please believe I'm not talking about a whole life insurance policy. And understand this. I write whole life insurance policies. I have a specific demographic of people that I write whole life insurance policies for. I'm not a hypocrite, but I'm going to tell you the truth. If you are young, relatively young, if you're still working and things of that nature, and you have a whole life insurance policy, again, because again, assuming that you can still get other life insurance policy, I'm here to let you know you are cheating yourself. You're taking your own self to the cleaners. Nobody else is doing it. You're taking yourself to the cleaners. A whole life policy is trash when it comes to building cash value. And I'm going to give you a couple reasons why, and I'm going to get on down. The first reason why it's super expensive. It's more expensive than an IUL policy. That's the first thing I can tell you. The second thing is it has a cap to how much money that you can add to that policy. Because what happens is when you start meddling with that, you now have to set that life insurance policy up where you're not concerned about the death benefit. You're concerned more about the cash that you have access to, right? So that's kind of risky because, again, if you're looking to make sure that your family is protected, you want to make sure that your cash value is growing and you're not having to sit here and negotiate, right? That's reason number two. And again, as I go back to being able to invest in it, they put a cap on how much you can put into that policy. And here's the thing about that cap. If you go over that amount, meaning you overfund over that amount, now that money gets taxed because it becomes what's called a MEC or a modified endowment contract. So you add more money to it, but now that thing can be taxed when that death benefit is active. Again, what most people don't know, your death benefit is tax-free. It is tax-free income. It doesn't even get counted as income. You don't have to claim it on your taxes or anything like that. Old Moneybag Joe tried to do that, but the powers that be told him, hey, I need you to callate on that one there. All right. The other point I'll tell you about a whole life policy is this. It's like Doritos. It's not your money. The cash value is not your money. If you have a whole life policy, here's my challenge to you. And listen, I'll put a steak dinner on it for anybody that'll take me up. Now, you got to acknowledge yourself. You got to be like, hey, Rod, I'm going to take you up on that. But I want you, if you feel like that cash value in there is yours, I want you to call that insurance company and tell them you want to take that money out. And I want you to ask them how much your death benefit would be if you don't pay that money back. So let me give you a scenario. So let's just say you have $100,000 death, you have $100,000 on the death benefit, and it has a cash value of $25,000. So if you go and get that $25,000, I want you to ask them, is your death benefit, will your family still receive that $100,000? So again, whatever those numbers are, if you have a $100,000 death benefit and $25,000 or $10,000 or whatever in cash value, I really want you to ask them, if I pull this cash value out, how much is my family going to get? And I can guarantee you right now, again, and I'm a state guy now, I can guarantee you they are going to deduct that cash value from that death benefit. Yes, they will. I guarantee you. I'm telling you, I have a client right now that's down in South Florida who is so thankful that we showed him the errors of him having that whole life insurance policy. This fellow was paying a lot of money for this policy. And he was like, yeah, because I got the cash value. And you know what I told him? I gave him the exact same challenge. I say, my man, call him, get the money. And he kind of looked at me. I'm like, get the money. If I'm a liar, they'll give you the money. No problems, no issues. I promise you. So what happens? He calls, and guess what? They don't give him the money. Matter of fact, they start telling him about fees and everything else. And he says to them, well, I thought this was my money. Yeah, but see, the way the policy is written, so and so and so and so and so and so. So I'm just here to let you know that at the end of the day, if you have a whole life policy, it is not your money. It is not. And you can take that to the bank. Well, you really can't, because if you do, they're going to take it from your death benefit. But the index universal life policy is not built like that. Whatever cash value you have access to that cash value. So again, let me give you that same scenario. You have $100,000. You have $25,000 in cash value. You pull that $25,000 out, your family is going to get, and you pass, your family is going to get that $100,000 death benefit. That's how it works. And that's why banks use those policies, not whole life policies. That's how it works. And last but not least, and I can tell you, and I'd love to have an opportunity to sit down with you so we can look at it for you and your family. But I can show you specifically how, even though you'll pay less money for a IUL policy, your cash value will be more than the whole life policy. Guaranteed. Guaranteed. I've seen it too many times. I've seen it too many times. When I sit down with clients in the 20s, 30s, and 40s, and we look at it, by the time they get to 67, you always have about $2,000 to $3,000 more paying less because the product is in the market. And like I say, that's your money. That's your money. And so, with that being said, I just wanted to let you know we've been played, fam. The banks played us on this one here, but it doesn't have to stay that way. You can get your own IUL policy. You can get your own policy wherein with you have access to that money, where you have access to that cash value, and you're able to do with it what you want to do. So again, as I get ready to get out of here, I went over my time tonight, but I want to thank you all for listening. I see you there. Bro Brown, man, we're going to holler, man. We'll get at you tomorrow, man. So hit me up, bro. But again, want you all to know that whatever I tell you on here, I stand behind. One thing, if you know about me, I'm not hurting for no money. I'm not after your money and stuff like that. I want you to know what's going on because I want you to be able to pass down generational wealth to your families. I want you to be able to make sure that your family is set up for success. And then here's one thing that I'll end with. Please, please, please make sure that your life insurance policy has what's called living benefits. If your policy does not have living benefits, you're literally cheating you and you're cheating your family. What living benefits do, God forbid you're diagnosed with a heart attack, you have a stroke, cancer, whatever the case may be. You get into that situation and where you can't work or anything else like that, the life insurance company is going to say, hey man, sorry about what you're going through. Let's say you got a $500,000 policy. You know what? Sorry about what you're going through. Hey, here's $400,000 of your death benefit for you to be able to take care of yourself and take care of your family while you're going through what you're going through. And guess what? You don't have to pay that money back. And oh, by the way, you still have that $100,000 in death benefit that, again, God forbid, if anything should happen, your family still gets that $100,000. Can you imagine that? You just got the word that you got cancer. Your wife has cancer. Your husband has cancer. Your husband had a stroke. Your wife had a stroke. Think about the situation. And it breaks my heart because so many people continue to gamble and put their family in error's way. You can have a car wreck today and not be able to work tomorrow. What are you going to do? The mortgage is still due. The car note is still due. What are you going to do? What is your family going to do? Are they going to be able to sustain themselves? If you get sick or whatever the case may be, is your significant other going to be able to take off work, or are they still going to have to go to work while you're messed off? Come on, folks. This is why I get on here. I love you enough to tell you the truth. I love you enough to put this out here. And again, I know a lot of people see my stuff and scroll right by. That's fine. But here's the thing. For those that do, for those that listen, those are the ones who will know that, God forbid, if anything should happen, my family's taken care of. And guess what? It doesn't always have to be death, because it's not always death. Sometimes you're in a terminal situation. Wouldn't it be wonderful to get that money then to make sure you can pay off your house? Again, so everything is taken care of on the front end. Let me give you another little tidbit right here, because here's another thing. When people start talking about how life insurance is a scam, they say, well, my insurance got held up. My insurance money got held up for my family member. Why did it get held up? Let me tell you why. Because your creditors can put your money on hold. Yes, indeed. They can put your money on hold. So think about it like this here. You have a house or whatever the case may be, and something happens. You got a death benefit of $100,000, but you owe people $50,000. Don't you know they can hold your money up in probate? Yes, they can. No, 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 no. You don't pay that. You don't get that $100,000 until that $50,000 paid off. So these creditors that you have, these credit card companies, all these people, they're going to try to get their money up out you. And the way the system is set up, they're going to give it to them before you get it. But think about it like this. If somebody's going through something, if they're terminal in nature or whatever, at least now you get that $400,000. You could pay off your mortgage. You could pay off your car. So now you can be debt free. And now you're just dealing with the situation at hand. So again, something happens, at least now you're not in dire straits. At least now you're not just like, oh Lord, I'm waiting on this $100,000 or whatever the case may be. You're waiting on the creditors to get all theirs, but you don't get yours. Come on now. Come on. This is the type of comfort. This is the type of assurance and insurance that we provide our clients. And so we love to have the opportunity to sit down with you and your family to make sure that you have that confidence that, again, whether it happens where it's fatal or it's terminal, you are not worried because you know you'll be taken care of. That's what we bring. That's what the essence of generational wealth builders bring. And that's why our motto is where poverty ends with us. Because I'll have you know, statistically, it's actual statistic out there that one of the main reasons why families file for bankruptcy happens when it comes to a medical emergency, when a loved one that was an income earner dies. That's one of the main reasons why people go into bankruptcy. They can take care of and kind of manage while you got two incomes. But again, something happened to one or the other one is not long after that they're filing for bankruptcy. And it does not have to be so, because you can make an investment in yourself. And here we go again. I'm not even talking about them taking away your cash value. Your cash value is still there. They're giving you that money from your death benefit. Hear me clear. They're giving you money. If you have a $500,000 policy, I'm just pulling numbers here, and you got $100,000 in cash value, if they give you at 80%, which is that $400,000, that does not come from your cash value. That cash value is still yours. You still have access to that cash value tax-free. These are the type of products that we have. These are the services that we provide to our clients. And that's why I'm so thankful that we have so many of our clients that are coming on board. And again, we're so grateful to have them. But as they're starting to see it, they're like, God almighty, that's amazing. That's amazing. And so I'll end with this. The banks are doing it, and the banks are profiting off of it. Why aren't you? If the banks are doing it, why aren't you? I've learned this one thing, and I tell the team that I work with this all the time. I'm going to move the same way that the wealthy move. I found out. That's the secret to building wealth. If the wealthy do it, because here's the thing, the wealthy aren't going to take a loss. No, no, no. They are going to make sure, and the people that they put in position are going to make sure that they don't take a loss. Period. That ain't true. Remember, just a couple of months ago, there were banks that failed, right? And the FDIC, the limit that they would cover, that they would protect was what? $250,000, which means everything over that $250,000 was lost. All bad. Now, what most people would do would be diversify. So I put my 250 here, 250 there. So again, theoretically, you'd be protected like that. But here's what happened. When that whole Signature Bank thing went down, and again, allegedly Oprah money was in there, but all them rich folk money was in there. Guess who picked up the tab for that? Taxpayers. Why? Because the people that they put in position are bought and paid for, and they're going to make sure that they don't become poor. Now, you and I are having to foot the bill on this. You and I, as taxpayers, are having to foot the bill on making sure that whatever they lost because of risky investments, they're good. So that's what you have to understand. When I say we move the way the wealthy move, that's what we do. That's our goal. And our goal is to help you be able to bring those tactics to your family again so that you can build generational wealth. You don't have to die poor. You don't. You don't have to, and I'm not talking about you don't have to have a six-figure income in order to have a great life. You don't. You don't. We can show you how to make sure that your family is taken care of so that, again, God forbid, if anything happened, and the worst thing being death, your family is taken care of. The worst, the next level, if you have a heart attack or a stroke or get cancer or something terminal, some kind of critical, chronic terminal illness, your family will be taken care of while you're still alive. You get access to that money while you're still alive. All right. So listen, I beat my drum for tonight. I'm getting ready to get on down and get up out of here. But I want you to know that we are in the position to help families save, grow, and make money. And again, I'm licensed in 20 states. So I'm licensed in a state near you. If you want to talk and say, hey, Rod, let's sit down, we can do it on Zoom. I would love to be able to help you construct a roadmap so that you can have the same type of confidence that I have for my family. That again, God forbid, if anything happened, we can't stop life from happening. But what you can do, you can make sure that as best you can be, you are prepared and that your family is prepared. And again, I could not stomach knowing that my wife and daughter, if something happened to me, where again I can't do what I need to do. Life happens. Again, God forbid, I plead the blood now. But if something happens to me or if something happens to my wife, I know that we have money coming in. I know money is not going to be an issue. We'll be able to focus more on her being able to get better. Make sense? All right. Well, listen, it's your man, Rod Hickman, Generational Wealth Builders, where poverty ends with us. We'd love for you to book your time with us. Again, just a 15-minute consultation will get you on the road to building generational wealth. All right. Well, look, y'all have a good night. May the Lord bless you and y'all take care. All right. God bless. Bye bye now.